All right, everybody, here we go. Stocks by the numbers. Super Microcomputer Incorporated, probably one of the most highly anticipated quote unquote business update releases that the entire market has been waiting for just inside of the last 6 weeks since the ball dropped. In my opinion, none of this is an issue. Now, I know immediately as the numbers hit, you can see the stock had a big drop and came down to low 31s, 31.13, immediately had a bounce straight back up to above 41, and then you can see now we're tightening, we're flattening out. Looks like we're almost potentially forming maybe an ascending triangle. It might hang out and then pop higher, and I'll explain my reasoning why, because I'm sure a lot of people are going to say, well, they slightly came in below estimates, they lowered their forecast for the full year, so shouldn't the stock be down? In the immediate short term, I can completely appreciate that argument because, of course, we want to see companies beat earnings, and when they come in light, we usually beat them up a little bit. However, of course, I redirect your attention to something like Tesla, which has been consistently missing earnings estimates, yet the stock stays up, everyone keeps buying it. So, I don't know, it really doesn't even matter sometimes. But let's get into some of these business highlights here. So net sales in the range of 5.6 to 5.7 billion, reflecting 54% year-over-year growth at the midpoint. GAAP non-GAAP gross margin in the range of 11.8 to 11.9%. GAAP diluted net income per share 50 to 52, flat year-over-year, which again might be causing some traders to potentially jump ship. In my opinion, just for the record, my eyes, again, I'm looking further out. I'm looking at the big picture, looking out towards the finish line. And in my opinion, this stock is tremendously undervalued. I stand by my analysis, $200+ a share long term. Stock compensation, 6 million. Okay. Total cash, 1.4 billion. Total debt of approximately 1.9 billion. So they're practically canceling each other out. Quote, with our leading direct liquid cooling technology and over 30% of new data centers expected to adopt it in the next 12 months. Again, 30% of new data centers, which is 1 out of every 3 new data centers coming online, are expected to adopt their direct liquid cooling in the next 12 months. Supermicro is well positioned to grow AI infrastructure designed wins based on NVIDIA Blackwell and more. Combined with exceptional product quality, service, software, networking, and security with data center building blocks, Supermicro will expand our leadership as the premier US-based data center infrastructure solution provider. We anticipate this technology transition sets a strong foundation for us now, resulting in fiscal year 25 revenue in the range of $23.5 billion to $25 billion, paving the way for $40 billion in revenue in fiscal year 2026. So basically, this right here, this one tidbit, is, in my opinion, what the traders are focusing on. Now, again, I completely appreciate the fact that we all have different strategies, we all have different timelines, time horizons. So, if you stepped in for some puts and they immediately bring it down because it's technically slightly lower guidance, it was a slight miss, I can appreciate where you're coming from. So, of course, as we know, as we've seen with SMCI, essentially with the last couple of earnings reports, we know it's going to be pretty volatile after these numbers come out, right? But I will say this. On paper, like I said, technically slightly lowered this guidance. If you're looking for a pullback, understandable. But again, in my opinion, people are missing the big picture here. First of all, this report was what a lot of people were waiting for. That's why the day they confirmed today's date to release it, the stock immediately started shooting up and raging. Okay, now you're telling me the company slightly missed, and yes, this definitely is, a couple of billion below what they were initially expecting. So I understand how bad it might look. However, this is why I said that there's value here. And this is why I said that I like the company, because of the growing revenue projected and the growth of the business overall. And just over the last couple of years, again, you can see 2020, 3.33 billion, over 3.5 billion, over 5 billion, over 7 billion, almost 15 billion. And now, instead of saying, yeah, we're going to get close to doubling it and we're going to do, 28, 30 billion, now they're saying we're going to do 23.5 to 25 billion. So again, technically, is this right now a couple of billion shy of what they initially projected? Yes. However, on the flip side, going from 15 billion year over year to 24, 25 billion is definitely nothing to sneeze at. And we've spoken about this time and time again with a lot of stocks that we've looked at, whether they were bigger brand name tech stocks or smaller ones, even like Fubo, right? We have this phenomenal growth in the overall business or in the subscribers or in key segments of the business that people were watching previously, but now all of a sudden they don't care about. And you have companies coming out, 22% growth, 38% growth. What was the one we just looked at? AMD, I think it was, right? 69% growth, but it wasn't enough because they were looking for like 76% or something, right? You understand what I'm saying? So, that's why in the immediate short term, if they want to bring it down, they want to make it volatile. As a long-term investor, I personally will view that as an opportunity to accumulate shares, continue building a position in a company that I'm seeing is going to grow significantly over time. And, they're not mooning it yet. So I'll just keep buying shares when and where I can. And hopefully as this thing really starts to grow over time, starts to compound my principal, I'm going to be sitting pretty. So, in my opinion, did they lower guidance? Yes. However, again, we looked at the cash on hand. We looked at the debt. They essentially canceled each other out. So now what do? We look at, in my opinion, we look at the equity of the business and we look at the revenue they're bringing in, right? So let's check the balance sheet real quick. As of last quarter, again, let's not even update the numbers. As of last quarter, 5.5 billion. You want to speculate it went down? Okay, fine. I'll give you 10%. Boom, 5 billion. Okay. Cash and debt cancel each other out. We'll go in the mid-range of this. I'll give you 24 billion. And of course, they're going to make profits on that, right? So let's just call it 25 billion. So you got 5 billion in equity. No debt issue, in my opinion. And 25 billion in potential revenue coming out for the year. We add those up, in my opinion, the quote-unquote fair value of the business, conservatively, is about 30 billion. As of the close, 22.6 billion. This is a company that is forecasting growth of revenue year over year from almost 15 billion to almost as high as 25 billion now, even with the lowered guidance. And the market cap is here at 22, 23 billion and change. So there's a reason why, in my opinion, you immediately saw the big drop down. The stock was red like 15, 17%. Everyone in the Discord started typing out what was going on. And then you saw it immediately bounce right back, reclaim the 40s. And now you can see the more time that goes on, the more it wants to stay up, the more it wants to hold 40. Because I'm telling you, in the numbers, they beat it up so much that, in my opinion, they almost have to rebound it, even though it was bad news. So if we don't see much movement now after hours, again, 3-4%, okay, fine. People are a little bit more settled because the report actually came out, right? They didn't set today's date and then delay the earnings release or anything, right? There were no issues. So that's kind of a good thing. So that's why now the stock looks like it's just kind of hanging out at around 40. But this is why, again, what's today, Tuesday? This is why, again, like tomorrow, if you don't see much movement, or even Thursday, kind of understandable. Because in my opinion, what they want to do is they want to quiet it down. And in my eyes, they want to scare out the traders, scare out that quick money, that uneducated money, unfortunately, that, that's how they label you guys. And then they're going to start bringing it back up. That's why, what was it, just yesterday when we did an update, we spoke about potentially running to this 45 trend line. But again, they really did pump it up yesterday. And, RSI got overextended. Even pre-market, I think it was maybe like 43.5, and then it started to pull back. And if the report was a beat, or even if they reported what they did, but they didn't lower guidance, then in my opinion, they probably would have popped it right back up to that line. And we were talking about maybe slowly bringing it up to like 48, 50, 52. So now I think what they're going to do is, again, they're going to quiet it down and see how you had this big candle. And now, even though we had a wide swing up and back down, you can see it's technically smaller than this candle, right? So again, this is all speculation, but sometimes I like to lay it out for myself. So you can potentially do, right, something like this, kind of. That's a little too far, but you understand what I'm saying? Right? Earnings came out. Some people would want a big run up if they're looking at the numbers the way I am. Other people are looking at a lowered guidance, and they're saying, no, it should break back down to here, right? I should buy puts. In my opinion, I think it chills here for a day or two. Again, you could see Apex going out Thursday to Friday, and then potentially you're going to see a random run-up. And it might not make sense to a lot of people, but in my opinion, yeah, it makes sense. For the record, I do own a handful of shares of SMCI, but, I'm pretty transparent about it, and I only grabbed those shares recently. We've been talking about the stock for, like 15 months or something. But, I mean, 25 billion in revenue for next year, that company is worth more than 22 billion, in my opinion. I mean, I think most of us can agree. I think that's simple logic and common sense. Now you're saying on top of it, you're going to see the same percentage growth here, 60% in change. And the next year, you're expecting to go from 25 to 40. Like, the growth is there, right? See, that's what makes me laugh. If a company like Palantir came out and said this, what do you know? The stock would continue to climb. Again, in my opinion, Palantir, freaking stock was overvalued at $40, $50, right? It continues to climb. It hit what? 116, 118. Now, I understand people are going to say, well, it's a different type of color. I understand, but you understand my point as well. A company growing from 7 billion to 15 billion to 25 billion to 40 billion potentially. You can't tell me that stock should be flat. That stock shouldn't grow over time. You understand? So if you, of course, got in for the short term, you're glad it got back to 40. You didn't catch the high yesterday, but, you're concerned that it was a mixed report, so you're going to sell. Understandable, in my opinion. Understandable. But again, longer term investors, in my opinion, this growth looks great. This revenue projected to come in looks phenomenal. And again, something like this, lowering the guidance, I don't even view it as a big issue. Again, they brought in almost 15, and then they were guiding for 26 to 30. So, I mean, that's essentially like 90 to 100% revenue growth year over year. And the fact that they're coming in and projecting now they're going to come in slightly shy of that, I mean, I don't know if I would necessarily really beat the company up. Again, basically the same way I look at AMD. 69% growth, but you're saying it wasn't good enough. Like, I understand in the immediate short term if they want to pull it back, but in the long scheme of things, I don't think that missing that mark by a couple of percentage points is really going to be a big issue. And again, if they do close out the year at 24 billion, let's say mid-range, and then next year they do get close to 40 billion that they're projecting, I mean, you know what I mean? This is going to be very short-lived. No one's going to look back and say, oh, remember the time they lowered that guidance? Like, you know what I mean? But that's me. That's the way I'm looking at it. Stock right now holding 40. Yeah, we can see some tightening taking place here. That's why it almost looked like a symmetrical triangle. Excuse me, ascending triangle I was kind of looking for. How about if we come up like this? No. You know what it is? It's funny. It's funny. You're going to laugh. In my opinion, I think no one knows what to do. In my opinion, I think no one knows what to do. That's just me. That's the way I'm looking at it. Yeah, see, so we pumped it yesterday. We spoke about the RSI at 70 plus, and how we could have potentially spiked up to that trend line of 45, but again, pre-market the stock started to pull back and sell off, closing sub 39. RSI pulled back to about 60 on the daily. Let's check the weekly. Weekly RSI about 48.5. Pulled back, stayed above that mid-Bollinger Band, top Bollinger Band on the weekly 50. Of course, we'd first have to get to that trend line about 45, 46. So we'll see what it wants to do. But again, in my opinion, it might just calm down for a day or two, scare out those traders, and then it might start moving. And you can see previous pivot point. Looks like, yeah, maybe like around 40.5. And you can see technically we ran up above that, and then we pulled back below that. That's on the weekly, though. And the daily, yeah, you can see we had a resistance level right here at 42.70. And did we? No, we didn't hit that today. 42.39. So yeah, like I said, it might just hang out tightly here and then start to slowly run up when nobody's looking. Because we know that's how they like to do it, right? Because again, in my opinion, the people who are really going to make money in this company aren't going to be the traders. Because I think that the stock is so volatile, and they understand that you potentially stand to make so much in profits that they're going to try to make it very difficult for you to lock that in. You understand? And again, something just like Susquehanna, perfect example. Everyone else beat it up. They took the stock down to new lows. You know, they're looking out over the next year or two. They're giving the company the benefit of the doubt that they were going to release these earnings today and they were going to regain compliance by the 25th. Again, key date, February 25th to keep in mind. And, you know, they took a 5% stake in the company. And again, if I had cash, I said time and time again, the whole time they were beating it up here, the fact when it was slowly consolidating down here and people were wondering why it wasn't popping, I would have been buying shares every chance I could, right? And now we're already up 20, 30% even conservatively if you bought somewhere in here. And again, over time, in my opinion, I really do think you should be fine. I really do. That's why you're seeing this tightening here. You're seeing the stock trying to slowly climb up, tighten here in an upward channel. And then I think it's going to pop up and you're going to start to see higher levels. Look at that. As I say it, we technically just popped up. Yep, here we go. Here we go. Above 41 right now. We'll hang out. We'll watch it for a second together. I know, obviously, you guys are going to see this a little bit later because I'm not streaming this live, but, you know, 10 after 5 right now. And there's a reason, too. I know, you know, a lot of you were watching this stock. I know it's popular. And some people, you know, actually people always ask me, essentially every quarter, oh, you're going to go live? You're going to go live when the earnings come out? I mean, I don't really like live, but that's just me. But also at the same time, you see, you know, the earnings are out for a little bit, and now I'm jumping on, I'm doing an update right away. So, you know, it's not like I'm completely ignoring the situation or anything. And also, I like to give it a few minutes. I like to give it a few minutes, you know, and people in the Discord could attest to that. Stock, again, immediately dropped down here to the low 30s. And, you know, people were saying, oh, you know, are we going to break? How low are we going to go? And, you know, I just said, give it a minute. Give it a minute. We spike right back up. Now all of a sudden we're tightening. Now we're breaking up and out. Right? So immediately on the news, that's what I mean. Immediately they looked at the miss, the lowered guidance, and they were like, up, down 17%. Now the stock is up 8%. So again, potentially, I know 5 o'clock just passed. I mean, did we have some sort of earnings call or something? I don't know. But in my opinion, this was inevitably going to happen. Beautiful. Absolutely beautiful. Here, I'm going to brag a little bit in the Discord as I'm recording. SMCI breaking out as I'm recording. Oh, beautiful. Beautiful, beautiful. There we go. We're going to the trend lines. Right, see, so that would technically be, again, the top of the trend line of that range, but if we go up, potentially 46.25. Stock right now sitting at about 42. Climbing up now, you can see, yeah, maybe about 42.25. Let me check FinViz also out of curiosity. And again, I know I don't go live, but again, I like to take a few minutes to let the market digest the information. I like to kind of comb through some of the articles potentially that people are posting right away. And, and then I come to my own conclusion. Yeah, I just wanted to pull up FinViz real quick on the other screen. Still showing short float of about 15%. But you can see technically now where we're at. Look, we're hanging out right at that mark, 42.28. So, yeah, again, this is what I mean. This is what I mean. Technically, we could look at the negatives, but I just think people are focusing on the wrong thing. Let me recheck something here. Yeah, see, 5.6 to 5.7 billion for fiscal Q3, 46 to 62 on 5 to 6. Analysts were looking for 65 and 5.9 billion. Okay, so honestly, you know what I think? I'm going to tell you what I think. As we said, revenue was 14.9 billion, and then they upped the range 26 to 30. Honestly, in my opinion, I just think they got too excited. I think they got a little too excited. I think they saw what was coming, what was on the horizon, the fact that, as we read, 30% of all new data centers are going to use SMCI, direct liquid cooling, right? So they saw how they were going to be a significant piece in the puzzle of this growth. So they just swung for the fences, right? Even that's why I got so hyped about it. Because when we saw that guidance, I was making videos like crazy saying, holy crap, you're going from 14.9 to 26, 28 billion in revenue year over year. That's phenomenal. It's rare that a business sees 100% revenue growth year over year. Let's call it like it is. And again, now they're lowering it. Oh yeah, maybe it's going to be like 24, 25 billion. I'm still viewing that as a positive. I really am. I really am. I think, swung for the fences again. Maybe, eyes too big for the stomach, right? There's all these sayings, but that's basically, I think, what it came down to. They were seeing the writing on the wall, and they just put out big guidance and said, yo, this is crazy. We're expecting to double our revenue. And now it looks like, maybe like 90% you'll see growth, not that 100% you first laid out. That's why, in my opinion, it's not a big deal. But, oh yeah, wait, hold on. Yeah, right, wait, yeah. 5.6, 5.7. I'm technically looking for 5.77. So that's why, again, technically it was an earnings miss. Technically it was lowered guidance. But I just think that, more importantly, the fact that we did get the earnings release when they said, and more importantly, the fact that they're very confident that they're going to meet that February 25th deadline and maintain the NASDAQ listing. That's why, again, I personally think that people feel that they're going to get past these hurdles and these issues with really, no big obstacles in their way. And the business technically is growing like an animal. And even though it's not in line with what we previously anticipated, it's still phenomenal growth. And there's still value here. And now, again, a lot of people may say, all right, earnings are coming out. They're going to get their paperwork in place. I'm going to take a position now at around 40. Right? So now the institutions, the analysts might come back in and they might give it buy ratings now, overweight ratings, in my opinion. Bump up price targets to the 50s, 60s, 80s. Let's bring the stock back where it was. Right? We're growing nicely. We got a Hindenburg short report, but they came out to be shady themselves, and that's all nonsense, right? So that's why, again, laying out these trend lines, I keep saying, in my opinion, slowly running up to 46, 52, 55, right? 65. In my opinion, I think it's only a matter of time. So traders might be hard to deal with right now. Investors, in my opinion, seems like you have nothing to worry about. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you. Thank you for your time. Have a good day.